All right, you're welcome back to the channel. For those who are new, this is Flavia, and then today in this video I take you into the world of options trading. For those who want to trade options, I want us to go through what are options and how we can trade options. Stock options, for that matter, are contracts that gives a trader, or it gives you the right but not an obligation to buy or sell shares of a particular company within a particular time and then price. Okay, so when we talk about stock options, we always have a price and then we have a time. Now the price, usually we say contract premium is the premium, and then the time, you must buy or sell that option within a particular period of time. Right, now we have two different types of contracts, options contracts, and we have calls and then we have puts. What do calls do? Or what do we mean by calls? Calls is when you anticipate that the price of a company stock will go up. And, you know, we call those people bulls. The bull thinks is very optimistic about the rising of the price of a company. And so bulls go in to buy calls. All right. But then we have another category of people who also think that within this time, this price of the company, the price of this company will go down. And so they go down and then they look at buying puts. Okay, so that is a difference between, you know, calls and put. With calls, you anticipate the price to go up. So you are buying a call option. With put, you anticipate the price to go down. So you buy puts, all right? And then the next thing we want to look at is, okay, so why do we choose to trade options instead of buying stocks? Okay, so I would like to explain. You see, when you buy in stocks, take the stock of Apple, for instance. If Apple price is 100, or currently if we look at Apple price, I have not checked today, but let's just assume that Apple price is about $260, okay? And then you need to buy, you anticipate that Apple price will reach 270, okay? By, let's say, today is what, 20th? By, let's say, by Friday, okay? Friday will be like 23rd, okay? 23rd of August, 2024. So you want to buy 100 shares of Apple stocks, okay? So you go in there and then you buy 100 shares, and that costs you $26,000, okay, to own 100 shares of Apple. Now, Friday, when Friday comes and then Apple stock moves, the price of Apple moves to $270, then it means that you have made $10 on each share times your 100, so you've made $1,000. Okay, so that is when you are buying shares. But when you are buying options, is quite different. So we want to look at the reasons why people choose to buy options instead of buying shares. Okay, and number one reason is leverage. Leverage gives you the opportunity to control, you know, shares for a smaller upfront amount, you know, upfront investment. So as I was giving you the example of owning 100 shares of Apple, now let's look at, we paid 26,000 to buy 100 shares. Now, when it comes to options, this an options contract to owning, to buying, controlling, that the word is control, not own, controlling 100 shares in your contract. The price of that contract, and remember I said that price is called premium. So the premium could be like $400, okay? And then you are saying that you want to buy a call option, and the option price is $400 as against 23rd of August, okay, 2024. Right. So this is why options trading is very, very attractive, because when you don't even have a lot of money, you can trade options. Okay. And the number 2 reason is that it's very flexible. You have more ways to profit, whether the stock price is going up or is going down. Remember, in the definition, I was saying that when you anticipate the price of a stock will go up, you buy calls. But when you think the price of a stock will go down, you will buy puts. Okay? So it's just flexible. Okay? You don't have to sit there because price of stock is not going up or price of stock is not going down. Either way, you do your analysis and you can jump into a contract. And then when it goes down or up, according to your prediction, you make your money. Right. And then the third example and reason for why people like to trade options than buying shares is because it provides you a very excellent way to hedge against losses in your investment. Okay, you can use options to protect your investments against losses, because whilst your investments are there, you can be trading options and that gives you money. So in case there are any losses in your investment, you still have made enough money to hedge against that position that you are holding. All right. So in the real world, let's look at what happens here. Okay. Sometimes people get to understand that, okay, if it is this simple, then I would like to trade options. But sometimes it's not that simple. All right. So we look at, what we need to do to be able to trade options. And one of the things that you need to really have at the back of your mind is that there's a lot of risk when it comes to trading options, because remember, options are contracts, and options contracts are just like insurance contracts that we enter into. Take for instance, you insure against your car having an accident. Now what happens if your car has an accident? You go and get a claim. You pay a premium, which maybe you paid a premium of, let's say, $2,000 or $1,000 on your comprehensive insurance, and then the accident happens. When it happens, insurance company will not look at what you had, what you paid, to insure. They will pay, they will fix the car. And no matter how much it's going to cost, you are already in contract with them to fix the price because you pay the premium. The other way is that if the accident doesn't happen, what happens? You can't go and claim that claim. You can't go and claim the premium, right? You can't go and say, okay, the accident didn't happen, and so, I need to get my refund. It doesn't happen. It does not happen in insurance. Same thing with contracts. Okay, so we are ready to trade, okay, but not so fast, okay? You've understood how to trade options, and then you are ready to trade. What you need to do is, number 1, is to register with a good broker whose fees are very low, because remember, every trade that you execute, there are fees that come with it. And, you have to get a broker that the trading fees are low. And then their customer service, in case you have any issues, their customer service is also excellent. And I will recommend my broker, that is Interactive Brokers. That's an American company that you can trade with. They have, their platform is very nice. They have low fees of trading, excellent in customer service. Okay. But when you do this, you create your account with Interactive Brokers, and then my link. Okay, you can create your account by clicking on my link on the description, which gives you $1,000 worth of free stocks. Free! If you use my link to create your account, okay? But not so fast. When you register and then you fund your account, you need to learn how to trade first. Whether you understand it or whatever, when you are able to prove to yourself practically that you have been able to trade, you've been able to learn how to trade, and then you are making money, then you can trade with your real money. Now, what happens when you register with Interactive Brokers? You can download the paper trading app. The paper trading app does not work on the desktop, but it works on the phone. You can practice how they will give you fake money of about $1 million in your account. And then you can practice how to trade stocks, stock options, whatever you want to practice. You can practice there until you become perfect using, we call it paper trading. Paper trading is when you are practicing how to trade stocks or options or whatever it is in the stock market. Okay, so get to understand the way options work before you invest your real money to trading options. All right. Subsequently, we will be looking at videos that we will talk about strategies we can take to be able to trade options profitably, and then some of the things we really need to look out for before we can enter into a position. Okay, and then we will look at how we can also take advantage of some of the indicators to be able to execute our trades profitably. Now, if you have found any value in this content, please subscribe to the channel and then also like the videos so that it goes a long way to help the channel. Until we meet on our next video, I wish you the blessings of God. Bye.